On October 13th, the latest read on CPI showed a small slowing of year-over-year inflation. Unfortunately, the slowing was less than what the market expected and appeared to be the cause of a sudden plunge in risk assets. Now, at the time of the release, the 2-year versus 10-year yield spread moved from negative 38 basis points to a near-term low of negative 54 basis points. Initially, this move seemed to make sense as persistently high inflation increased the probability of consecutive 75 basis point hikes at the next two FOMC meetings from 27% on October 10th to a current level of almost 70%. This is according to the CME Group FedWatch tool. Now, since that time, 2-year versus 10-year spread has drifted higher up to a current level of negative 43 basis points. Interestingly, Fed funds futures are now pricing in a rate cut by July of next year, which is slightly earlier than was previously priced in. Perhaps the move in the markets is now reflecting a belief that the latest data has opened the door for a more aggressive Fed in the near term, which could bring the tightening cycle to a conclusion sooner. If a trader believes that the movement in the yield curve suggests a move higher, they could express that by buying the October micro 10-year Treasury yield futures contract at 4.00 and sell the October micro 2-year Treasury yield futures contract at 4.40. This represents buying the 2s versus 10 spread at negative 40 basis points. A target for this trade could be placed above at negative 10 basis points, and a stop could be placed below at negative 58. This trade could make 300 if the target is reached and risks 180 if you're stopped out at your level. Now, if a trader believes that the curve could invert further from here, they could express that by selling the October micro 10-year Treasury yield futures contract at 4.00 and buying the October micro 2-year Treasury yield futures contract at 4.40. This represents selling the spread at negative 40 basis points. A target for this trade could be the 1981 lows of negative 80 basis points, and a stop could be placed above at negative 15. This trade could make $400 if your target is reached and risks $250 if you're stopped out of your level.